Right on cue there with a little Pink Floyd money. That's because we got Jeremy Nelson, partner at Element Wealth, in the Element Wealth studio. Jeremy, always good to see you.
Always a pleasure. I like my walk-up song every time I come on.
Little money. I can dig it. So, it doesn't get a lot of attention, but the tax proposals, I'm going to start there, from the two primary party candidates, couldn't be more different.
Absolutely not. Right. On one side, we're just going to solve all of our issues by blasting anybody that makes money with taxes.
Yeah.
Right?
Yeah.
And on the other side, we're seeing some things that I don't think are realistic. Right. I mean, I don't know how you can not tax Social Security, because we've already got an issue with Social Security and funding, so that becomes a problem.
Yep.
But eliminating taxes on tips and things like that, obviously the one big thing that I see is when you look at the Senate, and if you see President Trump win, the probability that you get an extension on his tax cuts goes way up.
Agree.
Right. I think that if Harris were to win, and again, I do think that the Senate looks pretty good for the Republicans.
Yeah.
So any tax bill is going to – the Democrats would have to cave on a lot of stuff because they're not going to get anything done. The risk there becomes that we just then revert back to what it was previously. So I think that overall, when you're looking at the tax implications, if you have a divided government, it's going to be hard for anything to change in a major way. And that's just when you look at it from a realistic perspective.
Yeah. Well, my concern is that we end up with a split Congress. One party controls the House, one party controls the Senate. If I were a betting man right now, I'd say the Democrats maybe end up eking out control of the House, and the Republicans take over the Senate, which you'd rather have, because that's where all the judges and appointments occur in the Senate. It's more powerful in that respect. And, of course, having a body of 100 just wields more power than a body of 435. Each individual vote is more powerful.
Absolutely. I mean, if you told me for Republicans that they're going to get the House or the Senate, I'd say I want the Senate.
Yeah.
There's just more. There's more power. There's more tenure there. The House just turns over so frequently, right? That 2 years anything can happen.
Yeah.
So going ahead and getting control of the Senate is the big thing. But again, when it comes to that tax policy, my number one concern longer term is I'm not hearing anything that's going to solve a $2 trillion deficit.
Nope.
I'm not hearing anything that's going to put a dent in it right now. And the reality is that that's the issue that we're facing today, that over the intermediate to longer term becomes the big issue, because we've been racking up these deficits since 2000. Right? And you got to get to a point where you're getting close to balancing a budget and not adding on to the debt.
Well, as you know, borrowing money by the federal government is inherently inflationary. And as long as we're spending a whole lot more than we're taking in, we got to go borrow money. And that just makes it extremely difficult to control, if not eradicate, inflation.
Well, I find it very interesting, right? If you look at what's happened since the Fed cut interest rates, go look at the 10-year Treasury. It's gone up about 0.4%. We're sitting on 4.25 now. So, everyone thought, rates are going to come down. But they're not. Yeah, the short term that the Fed controls are coming down, but the longer term rates are actually going up.
Which signals, does it not, from the investment community that they're not convinced that inflation has been licked?
Absolutely, 100%. And I will tell you that, again, if you made the point just a second ago there, if you're continuing to run $2 trillion deficits, it's inherently inflationary, right? Because at this point, that money is going into people's pockets. It's creating additional consumption, and that ultimately is inflationary over time.
Yeah. So something that caught my attention in just digging through Kamala Harris's tax plans that I think would be of major interest and importance to a lot of our audience, who are small, mid-sized business owners that are pass-through entities, meaning the income from their business just passes through to them to pay taxes as an individual. Well, under the Trump tax cuts, there was a provision that allows a 20% deduction.
The QBI.
Yeah, off the income produced by your business. Before, essentially, you write it down on your tax returns. One way to put it.
Yep.
You make $100,000, you take 20% deduction. Now you got $80,000. That's what goes down as your top line gross income for tax purposes. Well, I don't know if you've seen this, but I know you're aware that she wants to increase the net investment income tax. It's currently 3.8%. That's presently applied to passive, so-called passive income, which would be income from investments, for example. You buy and sell stocks and bonds and other securities. You're going to pay the capital gains rate if you had a gain, and then you're going to pay the 3.8% net investment income tax. She wants to increase that to 5%. And I don't know if you've seen this, she wants to subject pass-through income, non-passive income from a business to the net investment income tax. In other words, just take 5% off your bottom line out there, small businesses. An additional 5% you presently don't pay.
Which is problematic, and here's why. Right, so if you go back to your Economics 101 course, right, GDP, gross domestic product, right, is consumption plus investment plus government spending plus net exports. Well, investment is a major component of GDP. It is important, and if you are doing things that are going to stifle investment for small businesses, because remember, small businesses are the backbone of this country. And it's becoming harder and harder for small businesses to compete. And everything's going to these giant corporations that are going to replace people with AI and all that stuff, right? So ultimately, we need to continue to support small business because small business is ultimately what built this country. Google started out as a small business at some point, right? Amazon, same thing. So I think that it's important that when you look at a proposal like that, you understand, hey, this is bad. Now, do I think it gets passed? No.
Me either.
But inherently it's not good because it stifles investment, and we want the creation of new businesses because new businesses create jobs, and that's ultimately good for the economy.
I've said it before, I think, with you on the program, but it's that element of faith, confidence, and certainty. And if you know that this is even an idea, it affects you. It affects your decision making when you're running a business. Well, I feel like she's probably not going to get elected, but this is what the Democrats want, and if they get in position, they're going to do that, and that would be devastating.
It is in the psyche of a lot of business owners, right? There is that concern because there's we don't know. I mean, we see all the polls that are out there, but what we've seen over the past 8 years is that they haven't been particularly great, right? And so it holds businesses back. It holds people back from taking risk. They kind of say, hey, look, I just want to hold on to my chips right now because I know what I got, and I don't really want to put more out there. Well, in order to grow the economy, in order to create jobs, businesses have to take risk. And we need an environment for small businesses where it's conducive to taking risk.
And then there's the estate tax. And she wants to dramatically increase estate taxes. She wants to cut the exemption in half and then increase the rate substantially, 55%.
What I find interesting about that, and we've had a lot of conversations with clients about the estate tax lately, is historically speaking, it's the first place that the Democrats compromise. Right. If we remember President Obama, we were at risk that we were going to go back to the $1 million exemption, and it was at 3 at the time, and they increased it.
That's true.
Right, to 5, and then under President Trump, it jumped up to 10, and now if
13,
you look at,
I think,
because of the inflation over time,
it's indexed.
So I would be surprised because a lot of the Democratic donors this would affect in a major way.
Yeah, big time.
And so I really don't see them going that far. I think it's great rhetoric for the left to talk about, but practically speaking, I don't see it passing.
So Mr. Trump floated the idea of ending the income tax. He first mentioned this on his podcast he recorded this past Friday with Joe Rogan, ending the income tax and replacing it with tariffs, essentially, tariff income. We got a break right now, but let's continue that discussion on the other side. We got Jeremy Nelson, partner with Element Wealth in the Element Wealth Studio. And we're coming. Element Wealth Studio, you're tuned in to Middays. We're visiting with Jeremy Nelson, a partner at Element Wealth. So before we went to break, we're talking about Mr. Trump's proposal that, hey, maybe we could eliminate the income tax altogether and just replace it with tariffs. He loves using tariffs as a tool. Perhaps this is just a negotiating tactic that he's floating. But when you look at underneath the covers there at the math, that's pretty tough.
As my wife says to me all the time, that math ain't mathin'. So here's the fundamental issue, right? I think that we were talking off air, and on all of our imports, you would have to do like 150% tariff, right?
Yeah.
So that inherently becomes inflationary. And then if nobody's paying taxes, they've got more money to spend. So it would be an inflationary nightmare, right? Because all of a sudden the cost of everything's going up, and everyone's got more money to spend. So it would really hurt, a lot of people in the economy. I think more than anything, it's a message. It's a message to China. It's a message to other countries. Like, hey, just as in 2016, I pushed and I got it. I'm coming for you. Anything that you're doing that is we view as anti-competitive, or you're trying to steal our intellectual property, like, no, we're coming for you. So I think it sets the stage for negotiations on trade. Is it practical, and could you do it? I don't think so.
Yeah. Well, it's he's one that doesn't shy away from getting on out there, and you got to respect that. I'm for considering all ideas, even if they're sort of radical.
But I think that this is where it's the negotiating tactic, and it's smart in that sense to put that negotiating tactic out there, because if I start way over here, right, and you're worried that I might be able to do something like that, then it's going to push you closer to me when we start negotiating.
Yeah.
So I really think that that's, one of the things that, President Trump is great at is negotiating those sorts of things. And so I think he just puts the goalpost way out there and knows he's going to come in. But he knows that by putting it way out there, he's starting from a better spot.
Negotiating 101.
Yeah.
I mean, it's so not surprised. And as you well know, he coming from the big dollar real estate industry. I mean, that's inherent in the real estate industry. It's always a back and forth negotiating exercise.
I've got to make you fear what I might do to get you closer to my side when I begin the negotiation.
Yeah. Makes perfect sense. Well, we are looking, though, at two candidates, as we said, that have these very stark contrasts. The thing that bothers me the most about Harris and the Democrats is they just don't appreciate just how valuable is the private sector in this country to all of our prosperity. They just don't seem to understand. That's where it comes from.
Look, I struggle with this because as somebody that moved here, didn't know anybody, worked my butt off. I mean, I remember making $27,000 a year, working 65 hours a week, trying to learn my craft, right?
Sure.
And to sit there and then say, well, you've worked really hard, you've built multiple companies now in this industry, you've created a lot of jobs, and we're going to penalize you for that.
Yeah.
That fundamentally creates a problem. Like, nothing was handed to me. It wasn't handed to you when you started your business. How hard did you work? And I think that's what they're missing, is that we need Americans to be Americans. Americans are hard-working people, right? I mean, I think back to the Greatest Generation, and I think back to, seeing all these business owners who I knew that started with nothing and created companies that employed hundreds of people. The risk that they took, the personal guarantees, all that. They should be rewarded for that. They shouldn't be penalized for that, because that's what built this economy. So I'm just fundamentally opposed to anything that punishes, small business, because that's the backbone of this country.
No doubt about it. Well, as business people, as entrepreneurs, we understand what we sign up for. We understand the risk, the sacrifice, the the persistence, the resilience required. We get that. We experience setbacks and we absorb those. We deal with them. We pick ourselves up by the bootstraps and dive back into the ring again. I mean, that's part of it. But eventually, when that pays off and you're rewarded, it seems like the attitude from the Democrats is, well, you just woke up one day and had that money in your bank account.
Well, and the other thing that they're totally missing on that is these are the most charitable people. You know, I've been on the board of Make-A-Wish, and you wouldn't believe the generosity of people that have made it and their willingness to give back. You know what you're going to hurt? You're going to hurt charity. You're going to hurt people giving back. That's what you're going to hurt.
That's where it comes from.
Yes.
Yeah, I agree with you. If you look across the boards of all these fantastic organizations such as that, that's what they consist of. Mm-hmm. That's who those people are. That's a good point. But they don't seem to, I guess, place any stock or value in that. Again, I say that the attitude is, well, you just woke up one day and you schemed and you scammed and you leveraged the system which was stacked in your favor, and nothing can be further from the truth.
That's just not the truth. When you look at the vast majority of small businesses in this country, a lot of them were people who put it all on the line or had nothing and borrowed money to do it.
Yeah.
And that's what built the country.
Totally agree.
Why are we going to go punish that? We should reward that. Now, look, again, I'm totally comfortable that I pay a higher tax rate on income above what my receptionist makes. I'm good with that.
Sure.
Right? But there becomes a tipping point where when you push taxes too far, well, why am I going to work any harder?
No doubt.
Because they're just going to take this, well, I can go spend time with my family instead.
No doubt.
I'm not going to create any more jobs because it's just going to create more taxes, and I've got no incremental benefit. I would much rather just go spend time with my kids.
And the thing about it is, and you know this is the only country where that's possible. If you think through your Rolodex and your business, I wonder how many of those started out with, just as you said, with nothing, had an idea, took some risk, borrowed some money, leveraged that into an asset of value, monetized that, and now they need your help to manage that money. Yeah. How many?
That's like all of them.
Right, exactly. Why do we want to kill that?
I don't have any clients that were just handed millions and millions of dollars and started a business.
Right.
They all started from nothing.
Nothing. Yeah. Yeah. Me. I had zero. Nothing. I had to borrow money from my dad to get on an airplane to go talk to a company about doing business with me. I mean, Dad, I'll pay you back $300, so I don't have it, so... And look, my story is similar to millions across the country. Yeah. I'm not unique. I'm not trying to point that out whatsoever.
But like to my point, that's what makes this country great. And these proposals stifle that. And it gives the advantage to the Amazons and the Googles and the Apples, right? That's not who we need to be advantaging. They've been advantaged. Right? They're massive corporations with billions of dollars that can pay tax attorneys to figure out how to never pay taxes, right? And they can go to the markets and bring in capital for next to nothing. Well, small businesses can't.
That's true.
Because Dodd-Frank made it harder to lend to businesses.
An Obama-era law. Yes.
Right? Post-financial crisis, that was a regulation that dramatically affected the funding
That's true.
of small businesses through debt through banks.
Yeah, that is so true. It's just amazing to me that none of that seems to resonate with them. And I don't want – it's hard enough when you're creating a business, as you know, to get the market to accept your idea, to be receptive to it so that you can succeed, so that you can thrive without having to fight Washington.
Yeah.
So you got to add them to the list of all the challenges you got. It's hard enough out there to just get some attention in the market and to make ends meet, make the payroll, and make sure you can cover the expenses, and eventually you feel like you'll get rewarded. But when you're having to fight Washington to boot, that's just double whammy, and that's what these proposals seem to suggest to me.
It's a money grab because when you don't have anything creative, when you don't have new ideas, the only solution is, well, we see a pot, so we're going to go drain it. Right. But
that's so true.
But ultimately, that creates a bigger issue in the long run.
Yeah.
Because who's going to create jobs? Who's going to create jobs when these big corporations invest in AI and don't need people.
Totally
we are
true.
small business
That's
owners,
no doubt
right?
about it. Right. That are filling that gap and providing the value for the things that AI can't replace. That's exactly where it's going to come from.
Yeah.
It's the kind of the new renaissance for small business in that respect. Why in the world do they want to kill what made this country great? Because that is what's unique about this country.
Mm-hmm.
You've studied this across the world. No other place in the world is that possible. You got an idea, a little capital, you create that, you leverage it, and you have a big asset.
That's absolutely right.
No other country. But yet, they seem to want to put the kibosh on it, and I don't understand it. If you can come back on the other side of the break, we'll talk a little bit about the markets and investing and kind of your thoughts on how the election may affect that. We got Jeremy Nelson, partner at Element Wealth, in the Element Wealth Studio. Jeremy Nelson, partner at Element Wealth, is our guest. All right, so we've talked a lot about the budget and just the American economic system, which does provide the greatest opportunity of any on the planet, no doubt. Still does, by the way. There's tons of opportunity out there, and it is exciting. And a lot of folks are going to seize on that opportunity, and they're going to do well. They're going to get wealthy doing it, and we applaud them for it. This is great because we all benefit when they do that. That means they're serving society.
And all the people who got jobs because those people took the risk should be thankful.
No doubt about it.
Right?
Totally agree. All right, so, but from an investment perspective, we got some volatile markets. October, obviously, always a volatile month historically. Markets up today. We can't really identify any particular reason that's driving that. I don't personally think it's because of the expectation of any presidential candidate over the other. I think there's some degree of comfort the market's taking in the fact that the Senate is going to flip to Republican control.
Yeah, I would not disagree with that. I think that the comfort with the probability that Republicans will win the Senate kind of coincided with Trump going up in the betting odds a little bit.
Yeah.
I think that what you saw was there was a little worry, nothing major. I mean, we didn't get any big pullbacks, but when you had Harris step in for Biden, there was a big enthusiasm bump for the Democrats. And then ultimately it's kind of faded here.
Yeah.
Right? And you were starting to see it go the other way. I think right now you have a market that is very strong from a trend perspective and is continuing to attract a lot of capital. People are pouring in. There's a level of people who feel like they might have missed out that want to jump in and try to chase this. You got to be careful doing that. Overall, though, we see this where the stock market is expensive today. There's no way that you can digest the numbers and not say that the market is not expensive. But valuations are a horrible, horrible timing metric.
Yeah.
So markets can stay expensive a lot longer than you expect, and they can stay cheap a lot longer than you would expect. So right now you've just got a Fed that's getting more aggressive, right? They're cutting. You've got a trend that's very strong. So if you said there's three components, right? Trend, monetary, and then sentiment. Sentiment's kind of the contrarian piece. Sentiment is overly optimistic right now, but the trend and the monetary are in gear, and that's keeping the market going. This has been a little bit of a strange year because typically speaking, election years are positive, but they're kind of around average normally. And this has obviously been much greater than average this year. It'll be interesting to see as we go into next year. And then really I think the rubber meets the road in the midterm because midterms tend to be the worst years.
Yeah.
So, there's been periods of time like, if you go back to the late 90s where you had 4 consecutive years of those 20+% returns, it didn't turn out well after that. Right now, though, you got 23 was strong. You got 24 is strong. There's nothing slowing things right now. And so we could be in a melt-up at this point in time.
Yeah. Yeah, that seems to be the case. And by the way, explain to the audience what you mean by expensive. It doesn't mean that stocks as the actual dollar value price of an equity is high. It has more to do with their earnings.
It's
and
relative
the price
to earnings, right?
Yeah.
So if you look at the price to earnings ratio, right? So for math here, if I'm a $100 stock and I've got $10 of earnings, right? 100 divided by 10, my price to earnings ratio is 10.
Yeah.
Right, so the market today is pushing up around 30, which is historically well above its normal. If you look at the 10-year number called the CAPE ratio, cyclically adjusted PE ratio, it's in the 97th percentile all time. So it means that, hey, it doesn't happen very often where the market gets this expensive.
Yeah.
But it can stay there a lot longer than people would expect.
Yeah, and I think it seems like investors, it's kind of baked in. They've gotten a little more comfortable with these high valuations.
We've really gotten past the hard landing, soft landing. I mean, the market is squarely in. We're not going into a recession, so there's just a lot of comfort. Cash is flowing in. We're seeing some of the money market assets flowing in to stocks now, and that's ultimately what's driving the market higher. Because you got to remember, at the end of the day, the market is still about who's buying and who's selling. If you have more buyers than sellers, the market's going to go up. And right now we have more buyers. It doesn't matter what the price is, people keep buying.
Yeah, that seems to certainly be the case. And then, of course, we got, as you indicated, we got interest rates still indicating that the investment community thinks we hadn't really slain this inflation dragon.
I'll tell you, I think that fixed income is a very interesting asset class. Bonds right now are very, very attractive for anybody that's approaching retirement.
Yeah. Lots of options. That's why they need to call you.
That's right.
Jeremy Nelson, partner at Element Wealth, has been our guest in the Element Wealth studio. We're taking a break right now. It's Fox News Super Talk News coming right back. Stay